Hi, Harry here with the rant for July 11th, Friday. Folks, this period we've just been through and are about to see is probably going to go down as the most disjointed economic scenario in history. I mean, because my indicators are the best at telling us in advance what the economy should do as people go through their predictable life cycle of spending in generational patterns. And of course, and I have 3 cycles, just like the people who do climate change, and predict climate back zillions of years and forward. 3 indicators: this geopolitical risk indicator, the innovation technology cycle on about a 45-year clock, and this demographic generational spending cycle on about a 39-year clock. So what should have happened is we should have seen a peak in the great boom. That I almost stood alone in cheerleading the U.S. economy and the stock market back in the early to mid 80s, when people thought we had peaked back in the 60s boom and all, and Japan was rising and it was going to take more and more market share from us in major industries, and we were a has-been. And I said, no, we're going to have the great boom ahead, and Japan's going to crash by 1990, and boy did they. Okay, the 90s was not the best time. The 90s was the 30s for Japan in their cycle, and that's where they were. Where we should have been is we should have peaked in 2007 from the massive baby boom spending wave, and we should have had a long sideways off and on downturn that would have been deflationary in nature, like the 1930s. So note, every other generation we have deflationary crisis like the 30s, and then an inflationary long recession like we did in the 70s. Okay, that's the natural cycle: spring, summer, fall, winter. Okay, we should have been going from fall in 2008 peak into a winter from 2008 into 2022 or 23, and we should have been coming out of that in recent years, okay, with the millennial generation spending pattern. But what happens since governments discovered, oh, we don't have to take the economy's natural cycles, we can just print money, we can just run endless deficits. And of course, I've documented this up and down. Only person that will tell you we've had about $27 trillion in combined fiscal, about 2/3 of it, and money printing, monetary stimulus from 2008 up, particularly into 2022. And that's why we had one of the greatest stock runs and a very good economy at a time when we should have had more like a long depression. And again, depressions follow fall bubble booms, so bubbly booms end up in depressions. Normal booms like the 50s and 60s end up in long recessions like 68 to 82, okay? So that's what we should have seen. And instead, we get the greatest stock run in history, precisely because governments around the world, and I'm just used the U.S. as the prime example, we alone poured $27 trillion, okay? That was enough for the economy should have grown 6 to 7% a year instead of the 2 to 3% we got. But again, think about it. Without that bucket of stimulus over that long period of time, now going on 16 years, we obviously would have had negative growth net. And that's what happens in a depression, okay? And depressions bring down prices, and it shake out to the strongest competitors, which then come back in the next boom and bring even lower prices and better value to consumers, better jobs, and on and on and on. It's the natural cycle, and folks, the natural cycle works. We've seen more progress since the marriage of free market capitalism and democracy in the late 1700s than all the rest of human history put together. And now, what we have done, and literally, I mean this literally, by stepping in 2008 and 9 when the economy went down, and not just doing one $1 trillion hit to give the economy a little help to go through that big downturn, instead switching to 27 trillion nonstop fiscal and monetary stimulus. They totally bastardized free market capitalism, took over the economy. In other words, we don't trust it. We only like our economy when it goes up. Well, the economy needs to go up and down. It needs to foster growth, and then it needs to shake out the losers and the excess debt and the unproductive debts. That's how the economy works. That's the secret to free market capitalism. Not just investment, freedom to invest in the future and participate and profit from that, but the freedom to weed out the losers. It's equally important in capitalism to weed out the losers in a race for leadership. And again, I came out of the business community. I was a Bain & Company consultant, turning around Fortune 100 companies, and then I took the same kind of approach to turning around new ventures, which were my thing. I love entrepreneurs. It took me a long time to realize I'm not an economist, I'm an entrepreneur. I bring on a new point of view to an old science called economics, okay? I'm not a normal business manager. So I love entrepreneurs, I track them. They're the ones that create new generations, create productivity as they age, but it's the entrepreneurs that create something new. My differentiation is between radical innovation and incremental. 90% of innovation in history is making the stuff we have cheaper, quicker, better, all that sort of stuff, okay? And that's great. But it's the radical innovations that really distinguish. And what distinguishes America, United States, and Canada the most, we lead in radical innovation. So what they're doing by stopping the economy from going down as we should have, shaking out the losers, making us stronger. What doesn't kill you makes stronger principle. We're basically killing free market capitalism. And we're going to see what happens, because what has to happen now, if the economy is not going to totally lose free market capitalism, is we need to finally have an overdue shakeout that should have come between 2019 and 22 or 23. That's what should have happened, okay? Instead, we blew our way out of that with this $27 trillion, and 11 of that came just in the 3 years during COVID, 2020 to 22. So it was the greatest stimulus and caused that 9.3% inflation, which had to be shaken out now with tightening and stuff. But we're still not letting the economy correct and do what it needs to clean up its act and go forward. So I think this should happen. What I'm hoping happens is that we see a peak, and note throughout history, major stock market peaks tend to come in odd years, like 1919, 1929, 1937, going 1965, 1979, 1987, okay? 2000, early 2000 was one of the exceptions, few exceptions, and that was very close to late 99. It was closer to late 99 than it was close to late 2000, okay? So this later this year, and the market still looks like it's got some momentum here. It could peak at any time, but the odds are the market's going to continue to edge up into September, maybe October, and then start a correction that, if it gets enough momentum, will give us a shakeout and will end up setting up one more great boom, okay? And the more I think about this, the more I think back to the 1990s. I got known for coming out first with a book, The Great Boom Ahead, in late 92, when everybody thought the US was done and Japan and East Asia were gonna roll over us. I said, no, we're gonna have the greatest boom in history, because our baby boomers, and they're gonna keep us going up until late 2007, which all happened even more accurately than I would have expected. That's how I got known. Because back then, AIM mutual funds picked me up and splattered me throughout the financial advisory industry. 20, 30, 40,000 key financial advisors that manage most of the money in clients, okay? Because I could tell them, you can just put your money down, buy and hold stocks. That's what they wanted to hear. That's what AIM mutual funds wanted to hear and wanted customers to do. And we're going to get that second shot, but not now. That's the point. We are way overvalued here because of this 27 trillion. We need to shake out the bad debts and zombie companies, which both are at record levels beyond comparison to any time in history. We need to shake this out. That would likely to happen, and we'd likely bottom, and bottoms usually occur like 1932 and 82 and all. I could give you many of these in even years. So the most likely scenario here, and again, harder to predict than ever because all this interference, but would be a peak later this year and a bottom probably in early to mid 2028. And then we'd have one more solid buy and hold, just buy good stocks and hold them from 2028 through 2037, late 2037. So that would be close to a 10-year solid. You can just put your money in stocks again, sleep at night, and feel good about it. But you can't do it now because they've overvalued the markets and stimulated them again beyond. And to pour this much money in, people are going to look back in history and say, what were they smoking? To think you can run an economy just by pouring printed artificial money and running endless deficits. No business, no family, household could do this and survive without going bankrupt. And so we need this correction. I'm hoping it happens. For people that are in stocks, I think you can hold them at least into September here, and I'll keep people apprised of that in the newsletter. And if you're not in, you may want to get back in for a short play. I mean, we could make an easy 5-10% just being in the S&P 500 or the NASDAQ or the QQQ would be the simplest thing to buy here. And I just gave a buy recommendation recently in the newsletter for this. But it's a short-term buy, okay? We'll see how this goes into at least September probably, and maybe later, and then you get out, and then we see if 2026 brings what the economy really needs, this detox, giant debt and zombie company detox that we need so badly to keep the economy healthy. And then we will have that layup, that 9 to 10 year great boom where we can invest and sleep at night again after we take all the nonsense out of the economy. I don't know how to call it any more than that. This is just total nonsense to just pour artificial money in the economy and expect there to be no consequences. And again, appears like there haven't been so far. We will see. If we get a downturn, we will see the consequences, and I think it will be worse than anybody thinks because we're so overstimulated. So that's a lot in one rant. I'll leave it at that today, but we should see some exciting times, down and up. Down just ahead, hopefully, and then one more great boom for all of us to either sail through retirement on, or build up to a very comfortable retirement for people that are a little younger, in the decade to follow this. And we'll see.